Hey guys, what's up? This is Francisco with Valeriso Capital. We're gonna do the trade review of the weeks. So I'm just gonna do a quick review of my biggest winner of the week, and I'm also gonna do a review of my biggest loser of the week. That way we can take a look at both of the. We're gonna take a look at the risk management of losers, and also we're gonna take a look at the risk management, and the profit taking in the winning position as well. So the two positions that I'm gonna review. First one is a trade that I made in OXY to the long side. And then the second trade that we're going to review, which is the losing trade, is the one that I made in PANW, which is Palo Alto Networks. So let's just go into the charts. And remember, guys, that this video is just for informational purpose only and is everything based on my opinion and my risk management of the trades. So let's just take a quick look here. Let me just bring out my pen tool so we can get this going, and just give it a second. Here we go. So first of all, as you can see, I have OXY in my screen, and let me show you first I use TraderSync. As you can see here, I have TraderSync, and this one is the position in OXY, which ended up being somewhere around a 7% winner, somewhere around $423. That includes already the commissions that I pay for the trade, which are here. And then the losing trade that we're gonna take a look at is the trade in PMW, which is the one right here. And this one was somewhere around a 2.23% loss, somewhere around $212, including the commissions that I pay for the trade. So let me go first into OXY. Let's start with the winner right here. And you can see, right, you can see the dates. If you want to stop the video, take a picture of the position, you can see that the first bot into the position was on April 11. Then I scaling a little bit. I usually go with half of the position right at the beginning, and then I usually scale in a little bit as long as the position is working. And you can see that I made my second buy on April 14 and then on April 18. And then I finally end up closing the position on April 21. So here you can see, right, the price, right, 58, 59, 60, 60 and 78 cents. And then I ended up selling the position at 63. And we're going to go through the chart, and we're going to take a look at what was the reason that I took my profits at 63, and what was the reason that I added to my position while it was working. So let's just go to the charts really quickly here. And as you can see, I have OXY, right? OXY right here on my chart. This is a daily chart of OXY. And the moving averages that I have on my screen is the 8 exponential moving average, which is the orange line. I have the 21 exponential moving average, which is the blue line. And I have the 50 daily moving average, which is the purple line right here. The indicators that I have on my screen, I have the Enhanced Volume by Trader Lion. I have the TTM Squeeze, the Pro Edition developed by John Carter. And I have the Moxie indicator, which is a momentum indicator developed by TJ Watkins. And I'm also going to mention, this one is the hourly chart, same in OXY, right? This is the hourly chart in OXY. And I also have the Moxie indicator in the hourly chart. And I have the 50 daily moving average here. And I have the I have the 50 hourly moving average, and I have the 200 hourly moving average here. And I'm also going to explain how do I use this indicator in order to manage my trades and look for opportunities. So first things first, let's start at the daily chart. And as you can see here, right, the green circles that I have here, they represent my entry points, and the blue line and the blue circle right here represent my exit point in the chart. And if you want to take a look back, you can go through the trade. You can go back to the TraderSync screen so that you can look at also the points that I was buying in the chart. So first of all, what caught my attention into OXY? First of all, we are trending above a rising 50 daily moving average. That's the first thing that caught my attention. Second of all, OXY has been a really, really strong stock, right? As you can see here, right? We had earnings right here. We had a squeeze, we had a really strong move to the upside, and then OXY has been trending right above that rising 21 exponential moving average. And what usually catches my attention for a trade is this indicator right here, right? The squeeze indicator, right? What does the squeeze does? On summary, the squeeze, what it looks what it looks for, for stocks that are trading, that the calendar channel of a stock is trading inside that the Bollinger Bands, which measure the volatility of a stock, are trading inside the calendar channels of a stock. That means that the price is compressing inside those Bollinger Bands, and from contraction, we usually get expansion. So that's basically what the squeeze is all about. So that was what actually caught my attention to the trade. And of course, the second thing that caught my attention is that the daily Moxie indicator is above zero. That means that we have positive energy coming into the stock. So a continuation higher is a high probability. And of course, if we take a look at the volume, we can see that there was a lot of accumulation on the move up in OXY. So then how do I decided my entry points in OXY, right? A lot of people was talking about OXY somewhere around here, right? We had a really strong day right here, which caught a lot of chasers, a lot of people that was actually buying OXY as it was moving up. And I just waited, right? I just set an alert near that 8 exponential moving average, which is this orange line right here. And that was my first entry point for the chart. I usually, when I do that, I usually set my stop somewhere below this 21 exponential moving average. So as long as OXY was holding this 21 exponential moving average, I was looking to add to my position. So what happened next? OXY started trading above that 8 exponential moving average. And as soon as we have this inside A right here, you can see the small candle that is trading inside the high and the low of the previous candle. We had that candle, and that candle actually respected that 8 exponential moving average as support. So I decided to add to my position on that day. And then the next day, as soon as that we started breaking above that high of the inside candle, I added to my position. As you can see, I added to my position somewhere around this level. And then of course, I was looking for a breakout, right? I was actually targeting a move at somewhere around 68. And the reason why I took my profits, right? The reason that I took my profits as soon as we tested this pivot is the following. Now we have to move to the hourly chart. This is the hourly chart in OXY. And as I said before, I have the 50 hourly and I have the 200 hourly. Right here, I have the Moxie indicator, which is a momentum indicator. Basically, if you want to learn more about the Moxie indicator, this indicator was developed by TJ Watkins at supertrading.com, and you can take a look there so you can understand all the things about the indicator. But in summary, you want the Moxie indicator, you want this line to be trading above zero. When it's trading above zero, that means that we have positive energy into the stock. As you can see, it was trading above zero right here. So we have positive energy coming into the stock, so we can see continuation for some time. As soon as the Moxie indicator drops below zero, that means that we don't have positive energy coming into the stock. So any move above that 50 hourly should not be sustained. That's basically kind of what the Moxie indicator is telling us. And as you can see, price was moving sideways, but the Moxie indicator was moving lower, and the Moxie indicator was unable to move above zero. And that was the reason that as soon as we started to trade somewhere around the 63 level, I sold my position and I took profits. And if you can go back to the TraderSync screen so that you can see that I sold my position somewhere around 63.15, if I'm not mistaken. And the second reason why I took my profits here is because it was already trading near that weekly quant pivot H2. And the probability that we actually close above that pivot is usually somewhere around 20%. So I just prefer to go with probabilities and take the money and get out. So that was basically how I approach my position in OXY. And now let's go to my position in Palo Alto, which is PANW. So this one was a loser for me. But the most important thing is that this was my biggest loser for the week. And it was just half of my losing position it was only half of my winning position from OXY. So that's the most important thing here, right? That when you're wrong, you try to lose as little as possible. And when you're right, you try to win at least 2 times more than what you're losing. That's kind of the game of trading that we have here. And now if you want to take a screenshot here, you can also take a screenshot. And you can see that I bought my first position on April 20, bought my second position on April 21, and then I end up selling my position the same day that I added my second addition because I got a stop out. Because the most important thing is to always trade with a stop. That way you don't have any emotions or anything going on, and everything just mechanically works, and you can respect your system in a systematic way, which is really, really important. And then of course you can see the entries, right? I bought my first position at 624. I bought somewhere around 10 shares, and then I bought the next 5 shares somewhere around 618, and then I got to stop out somewhere around 68.64. So now let's take a quick look at the chart so that we can see what it looks like. And here I have PNW. And what actually caught my attention to PNW? As you guessed it, the squeeze. That's actually what caught my attention to this position, is that the price was squeezing. So that means that the Bollinger Bands were trading inside those Keltner channels. That means that we're getting some contraction in price, and usually from that contraction we get expansion, and I was looking for that expansion to continue in the direction of the trend. Most importantly, because price was trading above a rising 50 daily moving average, and we were respecting that 21 exponential moving average as support, and the Moxie indicator was above 0, and you can see that we have some accumulation in the charts. So basically I usually keep things really simple. I just look for 3 things, right? Is the stock squeezing? Is the Moxie indicator above 0? Do we have some accumulation patterns in the chart? And is this trending above a rising 50 daily moving average? And if the chart is trading above a rising 21 exponential moving average? Usually when I have those things, I just take the trade and I just manage my risk as I go. And then what happened, right? We have Palo Alto here. We were flagging, right? We were flagging above the breakout level. So this was looking pretty nice. I didn't chase the breakout. I usually don't trade breakouts. I prefer to buy the pullbacks because we are in a market that is traded highly in algo trading and all that kind of stuff. So I usually wait for the pullbacks. That way I can manage my risk better because that is my style. So I bought, as you can see here, let me just zoom in a little bit so you can see it a little bit better. There we go. Right here, I bought my first position right here at that pullback into that 8 exponential moving average. And then of course, we had a move up next week. We were unable to take that high, but as soon as we came all the way back down somewhere around here to that 21 exponential moving average, I added to my position, right? I added to my position, but the most important thing is that I added to my position, and as soon as I added, I set my stop. I was using this low right here and that 21 exponential moving average as my stop, right? And that way I protect myself from this, right? I protect myself from this flush. I just set my stop, right? If this is going to hold, it's probably going to hold like this, and then we're going to move up. But this time it didn't hold, right? We broke these lows, we broke that 21 exponential moving average, and I got to stop out in the same day. And there is no big deal, right? The most important thing is that I protected myself from this. And that's what trading is all about. And now let me show you something that actually was a warning sign. It was a warning sign telling me that this was a high probability event, and that was the hourly Moxie indicator. You can see right here, and the most amazing thing is that the Moxie indicator is something that I added to my trading system just a couple of months ago. So I'm still getting a little bit familiar with it, but it's an amazing indicator, and most importantly, it helps you a lot to catch breakouts that are actually going to sustain. And with what is really interesting here, you can see Palo Alto, right? Palo Alto was trading sideways, right? So that should be a good sign, right? But what was the Moxie indicator? What was the Moxie indicator telling us? The Moxie indicator was going down. It was telling us that this move was not sustained by positive energy. And as soon as price was above that 50 hourly, the Moxie indicator already dropped below 0. So this was a high probability event. The probability of this breakout failing was a high probability event, right? You usually want, what you want to see is the Moxie indicator above 0, kind of in this stair-stepping pattern, and then you can get some really nice moves above that 50 hourly moving average. But as soon as the Moxie indicator starts to to diverge and you get this kind of sideways movement, but the Moxie indicator moving down, that is a warning sign. And then of course I got to stop out, but I could have prevented myself from taking this trade if I was a little bit more aware about the Moxie indicator. So it's actually pretty interesting. So basically, as a summary, guys, I took these two trades. We did a review on my biggest winner of the week, and also we did a review on my biggest loser of the week. As you can see, the biggest winner was 2 times the biggest loser, and that is the most important thing in trading. And I hope this video was helpful for you guys, so that you can understand the way that I trade, the way that I see the market, and the way that I manage my risk, and the way that I manage my profits. So thank you so much, guys, for watching. Remember to like and subscribe. And if you find this video helpful, please make sure to share it, to do a retweet. I usually post these links also on my Twitter feed. And thank you so much, guys, for watching. And if you have any questions about it, just leave a comment. Just leave a comment below. Thank you so much, guys, for watching, and peace out. Bye-bye.